Captains of Industry, brought to you by Airtel.
Coming to you from East Africa, Kenya, where we're speaking to a series of leaders in commerce and within the agricultural sector about their leadership strategies and philosophies for this economy and generally for Africa at large. Frank Ireri was included in the 2009 International Who's Who Historical Society of Professionals. An accountant by training, he's worked his way up through various illustrious banks and financial agencies such as Citibank, Barclays and Commercial Bank of Africa to his incumbent position today as Managing Director of Housing Finance. Thank you very much for coming through. Now, it's believed that the sprouting of properties will increase over the next year. In Kenya, you're looking at demand growing to somewhere in the region of 150,000 in the next few months. What does that mean for you as a property financier?
I think for us, one, it means an opportunity, definitely a huge opportunity, but also with it also comes a challenge and a need for us to drive the opportunity that presents itself with the various stakeholders. So it's exciting, but it's also daunting in certain ways.
Yeah. What are the things that make it daunting? Because the central bank is very active in trying to stimulate lending, keeping interest rates stable, trying to really reinvigorate the cycle of getting cash to the consumer into the economy.
I think what really makes it daunting, what really makes it challenging is the supply side of the equation. And what we have in this market today are several constraints that are actually making it very difficult to achieve both ours and the country's through Vision 2030 for sustainable, affordable housing for the majority of Kenyans. Now, one you have is the escalating costs of land. Okay, land prices are really getting high. The second is the cost of infrastructure that goes into opening what would be like peri-urban areas to actually enable developers to come in and put up some of the mass housing solutions that are needed. Those two alone equate for about 50% of the housing costs. The other internal challenges we have that we are addressing with the government are the building code, which is still very outdated, relates back to the 60s, very much based on British building standards that are really not relevant to us here today. And a need for us to embrace affordable, modern housing standards and techniques. So those really are the main challenges that we see at the moment. And once those are conquered or those are achieved, we actually believe investors, especially private investors, will be willing to come in a big way to put up the much needed housing.
Now, obviously, a lot of strides have been taken within this economy to get people to embrace the idea of home ownership. There's been talk of tax breaks and tax incentives and tax exemptions for property developers and tax breaks for those who are first-time homeowners and a variety of mechanisms. In terms of the uptake, have people really started to think differently about property?
People have really started to think differently. The central bank, in conjunction with the World Bank, just released the latest statistics in terms of mortgage uptake over the last 5 years. And we've seen it more than double, in fact, almost triple in that period. But again, the truth is we're talking about a very small number. We're still really just scratching the surface. Because today, in the total market, you only have about 18,000 mortgages, which is really a small number when you take into account the hundreds of thousands of people who would love to own their own homes.
So what are the limitations? Is it a financing limitation, a mentality limitation? Because across Africa, people can give you very different reasons as to why they don't own a home.
Yes, it is a combination of reasons. One is the cost of housing, the costs, and that alludes to my earlier statement around the supply side of the equation. The second has been a fear. Now, what happened in the 90s, Kenya went through its most difficult economic period, where inflation soared above 50%, interest rates soared above 60%, and lots of people had their properties auctioned. So there's still that fear that some people have of being tied to a financial institution for 20 years, and yet you may still lose your property. Access to finance has also been an issue, but that is being addressed. And like you correctly said, the central bank is playing a key role in that. And also we're seeing a lot of commercial banks now actually coming up with mortgage products. So today there are over 30 institutions in Kenya that can offer mortgage finance. And the other would be still the high costs
Right.
of borrowing. Our interest rates are still in the double digits,
Right.
anywhere between 12 to about 15%,
Right.
which is still expensive.
Talking about access to finance, let's talk about those who are able to provide the necessary mechanisms for mortgage financing, such as yourself. Within that continuum are also challenges in terms of access to capital. Now, we know that housing finance recently went to the bond market to try to raise $5 billion oversubscribed, shillings, excuse me, and oversubscribed by 41%. There's a bit of a disconnect. And this has to do with the fact that of all the banks lending, only about 12% is allocated to your sector, and hence you're needing to go to the capital markets. Now, whilst we're waiting for the monetary policy to kick in, you've got to come up with innovative ways of raising this capital in order to support the vision that you have for this company. How do you overcome all those limitations?
No, that's very true. And in fact, we are licensed as a mortgage finance company under the Banking Act, and we are restricted to only operating savings and deposit accounts. And that was up until June this year, when after successfully talking to the authorities, we got the finance bill amended to allow us to also take on current accounts, which is another large source of funding for commercial banks in this market. But what again you have found is a person who is coming to save with you normally is not the same person that you'll be lending to. And in terms of the volumes, you're probably lending 100 times as much as somebody is saving. So there's that gap you need to finance. And that is what actually drove us to the capital markets. Now actually to prepare us to do that, we also had to spruce up our image, improve our financials, improve our credibility, because basically it is unsecured lending.
Yeah.
And you're going out to the big boys, the pension funds, etc., and telling them, hey, lend me $1 billion shillings for 7 years on the back of this story.
Yeah.
So we are very proud that we succeeded.
Yeah.
And I think what it also does is open the doors for other financiers and even developers themselves
Right.
to go to the capital markets to raise funds. But with it comes a cost. Because for these 7 years, we're going to pay 8.5% fixed. So you can imagine how much we can add on that to on-lend.
Yeah.
So we still have the macro issues within this country
Right.
to address around interest rates on a macro basis.
You refer to the fact that you were able to go to the capital markets for your own fundraising. But many have criticized not just the capital markets in Kenya, but just generally in Africa, that we need them to be deeper, more sophisticated. We need to look at alternative trading platforms in order to meet some of these real funding challenges. What do you make of the current situation in which Kenya is in?
No, I fully agree. But what gives me encouragement is that there have been changes taking place slowly and slowly. Because I think the biggest source of funds and are used around the world globally for housing are pension funds.
Yeah.
Now, while we don't have direct access to pension funds today in this country, we at least now have legislation that allows one to use their pension savings as a security to a lender like ourselves, so that we can lend them even above the value of the house to cover, for example, legal fees, the deposit, stamp duty, etc. We believe with ongoing discussions, we will get to a point where actually pension funds themselves are being either passed through financiers like ourselves or put into pools to enable both lending and developer financing. Yeah.
Now, through your work here at Housing Finance, you've also been involved with Habitat for Humanity. I mean, the guiding philosophy is that of turning the whole idea of housing from a liability to an equity, and that's an issue across the African continent.
Yeah.
But I mean, what's the deeper significance? Because we've just come out of a credit crisis, and those who look at the root causes say it's because of subprime. This philosophy that people at the bottom of the pyramid are entitled to owning a home, creating all sorts of mechanisms to ensure that they're able to capitalize that, but not thinking ahead in terms of asset bubbles and the lending criteria and so on and so forth. As we penetrate this new evolving market in Africa, how do you guard against that?
Yeah, because I'd actually blame that whole crisis really on the lenders, and it's really greed. It's really, I would really just describe it as greed. And I think the way to go about that is, apart from having a profit motivation, we also need to have that moral obligation to ensure that your lending does not strangle somebody, and that you're not lending beyond their means. Now, we are fortunate in this country that we have very, very strict regulation. Our central bank is probably one of the most switched on in Africa.
Right.
And with the regulation anyway, you can't afford to misbehave. But beyond that, and again, based on our values as an institution, we believe it's important to educate our customers. And at times we tell somebody, no, you can't afford that house for 5 million. Why don't you go for this house for 3.5 million? And maybe in 5 years' time, you can sell it and then buy the house of your dreams. Yeah.
I think the reason I'm raising this is because the Central Bank of Kenya has been quite forthright in the way in which it wants to see financial institutions operate in the country.
Yeah.
The governor has used the terminology socio-economic development, banks, all in one sentence, and he sees a broader role beyond lending and borrowing, and that is for the financial institutions to be part of the solution to the development dynamic. Should banks be involved at that level? Should the governor of the central bank be intervening at that level? Because part of the decision also to keep interest rates within the 6% range is to try to stimulate credit growth so that you start seeing investment for broader job creation and development.
No, yes, I strongly believe the central bank and through the governor should be. And we have, as banks and financial institutions in this market, actually been engaging with him and his team at least on a quarterly basis, and also through the Monetary Policy Committee that is charged with setting the monetary policy for the country. I think it is the right thing to do, and something that we believe him having set this sort of standard is something that will happen in years to come.
All right, we'll continue on this tack. Frank Ireri, Managing Director of Housing Finance. We're discussing mortgage financing, property development, making Africans proud and dignified homeowners in an era where economies are growing steadily across the African continent, in an era where the East African community has consolidated, and housing finance wants to be part of that solution.